Okay, good afternoon, everyone. Here we are in the middle of a Wednesday afternoon, which is kind of rare for us. We typically host our weekly training webinar series on Thursdays, but we're doing a double header this week. And the reason why, number one, you know and have heard what's going on in the annuity part of the industry. So rates are blowing up, products bigger, better than ever. And quite frankly, our annuity department here at Levinson is up, literally 2 to 3 times where we were a year ago. So things are taking off, and my goal and our goal here today is to make sure that our agents, right, life and annuity, if you're a rookie or a veteran, you know enough to be dangerous, and you can walk away with a nugget or two or a sales idea or new product info that you can take home with you and make a new sale, right, and help a new family, whatever the case is. So take out your pen and paper, jot down any great notes that you need to remember later this afternoon or next week or whatever it is, and then use that Q&A box on your little question pane that you can expand or minimize, and literally type away as we go. And we're going to do our best to answer every single question, comment that comes in. And the ones we don't get to, we will answer as soon as we hang up today's call. And then, like always, we're going to send out a thank you email to all of the attendees this afternoon before we leave tonight. And we'll include contracting, all of the product brochures, all of the lead information, basically everything we're going over today. Okay, so you have full access as long as you're active with Levinson. If you don't receive the email, it's probably sitting in your spam folder, or we might have your incorrect email address. So please call us if you changed your email recently and update us so we can update our systems. Okay, so switching gears here, we're talking about Corebridge today, okay, formerly known as AIG. They are one of our top FIA carriers, and there's a few reasons why. Number one is ratings, financials, which are so important when you're out there talking about financial products, right, as we know. And AIG being a household name, Corebridge obviously is the new name, but AIG is very, very well known, A+ ratings. So your foot is already in the door, number one. And number two, when it comes to individual products, right, if you need any support whatsoever, please, I can't stress it enough, reach out to Josh or Ashley in our annuity department anytime. Okay, and even if you have some questions, you think they might be a dumb question, maybe I should know this, or it's your first application ever on the annuity side, and you have some questions about training, or like I said, product info or suitability. Okay, don't hesitate. That's what we are here for. Period. Okay, it's also our job here at Levinson to provide all of the latest tools, technology, lead programs, okay, and some great social media marketing ideas. I'm going to show you some examples after Nicole, our guest presenter, speaks. Okay, I'm going to show you some real life ideas that I pulled up myself on social media that are working great, totaling over 500 likes and comments. Okay, and I'm going to show you what they look like so you can walk away with ideas. And I always say you don't have to go out there and reinvent the wheel. You just add a few spokes. So these are perfect examples of what's working today, right? And you can go out, make some tweaks, and then create your own piece to put on Facebook or Instagram or LinkedIn or whatever it is, all the above, hopefully, okay? Or if you want to run a Facebook ad on one of these concepts, even better. So anyway, again, it's all about nuggets, and that's the goal for today's presentation, just obviously on the annuity side. Okay, let's jump in. So what I want to do at the end too, we're going to have our question of the day. We'll give away the new Fire HD tablet, and I have an IUL prospecting book as well that we'll throw in there. So you have to answer our question first and correctly. We'll announce your name at the end, so make sure you stay on right before 4 p.m. Eastern Time. Okay, so fast forward. The next slide here talks about all of our carriers, right? These are all direct annuity contracts from Levinson to the company. And what's important here, you're going to notice top left corner, AIG is highlighted in number one, right? Now known as Corebridge. So again, there's a reason why, and the main reason is financials, ratings, household name, reputation. Okay, it's huge, especially when you're talking about people's money, investments. So that's a big foot in the door, as I said now for the third time. Okay, important stuff here. Now, what we're going to do is Nicole, our VP, is on with us. Okay, she's going to jump into the presentation in a few more minutes. But what I want to do also is talk about your point of contact here at Levinson when it comes to annuities. Okay, Ashley, now who's speaking today. Just a minute. So Ashley's got over 15 years now in the industry, inside of a home office and outside in the brokerage world as well. So again, there's no question that she can't answer. Okay, Josh as well. Josh is on the right-hand side there. Josh Hoffman, over 26 years on the brokerage side. And again, he was in the home office for many years in the competition unit. So what they would do is go out and they would find other products in the life and annuity space, bring them back, dissect them, and then try to build a product as good, if not better. So between both of them, okay, over 45 years of expertise in the annuity space. So please, again, reach out anytime. Okay, and obviously the list of the other carriers is there as well. If there's a product that Corebridge does not have, obviously we have full access to everything that you're looking at in front of you, and every company on there was handpicked. Okay, and each company represents a niche in the space, and the point is there's not a product that we don't have that's competitive today. Okay, period. Okay, so that's also important for you to know. So when you're talking about annuities to a certain client, you know after talking to Josh or Ashley, there's nothing better out there for your consumer. Okay, let's jump right in to part of the presentation where Ashley is going to take the wheel. Ashley, you there?
Yes, thank you, Bill. So first, I'd like to update you about our new annuity incentives for this year, 2023. As of right now, if you write $500,000 or more in FIA business before May 31st, you can receive a complimentary Margaritaville cruise for two. Furthermore, if you write $550,000 in MIGA business or $350,000 in FIA business, you can earn $600 worth of leads through our brand new annuity lead program. Also, you can gain free agency automator access, free leads, or marketing allowance with our new MAP program. And lastly, on the right side, you can see what is needed to be eligible for a free flight or hotel stay for our yearly Expo, which is coming up next month. Okay, and next, make sure you take advantage of the free annuity online tools we provide to our agents, as many other IMOs charge agents for this kind of service. On our annuity rate watch system, you can search for any type of fixed annuity product as well as view the current rates and impending rate changes. So you can view anything from traditional annuities, MIGAs, indexed annuities, immediate annuities. You have access to all of that on here, as well as running SPIA quotes or requesting specific income payout quotes from us. So you have access to all of that here for free through Levinson. And next, please remember that our agency automator system has annuity capabilities in addition to the life features. This includes a free annuity landing page that you can promote via marketing email blast or on social media as well. And it enables a customer to watch a video about the value of annuities and obtain a free copy of annuity brochures, which then generates a fresh lead for the agent. If a customer requests this, a brochure and an email with further instructions are then sent directly to the agent. So please give us a call if you need assistance with this and you want to know how to set this up on your agency automator system, or you just want to know about what you need to do to get this feature. Okay, and lastly, Please note that on our Annuity Experience section of our site, you can access many items such as pre-approved marketing materials, client assessments, fact-finding materials, and presentations to utilize during meetings with your clients. So if you're not sure how to present an annuity to your client, or you need those materials for your client's fact-finding, then you can retrieve that all here on our Annuity Experience system. Okay, and then I'm going to get it back over to Bill.
Perfect. Thank you, Ashley, for that. And, the goal is every week, right? We have these marketing meetings every Tuesday morning, and we have our entire marketing team of 9. We huddle up and we talk about what is our value add, right? What can we put together on our website, on the Annuity Experience platform that's going to help our agents open the door to share their story with more and more consumers. So that's how and why we put all of these great tools and platforms together for you all, okay? And most of this stuff is free. Once you're active with us, it's free, and that's on the life and annuity side. So just kind of keep that in the back of your mind. Okay, this is my last slide here, and then Nicole will then take the wheel. What I want to discuss is this is our annual Agent Expo. Okay, this is going to be the biggest one to date, our 51st anniversary, okay, coming up in 60 days. And number one, I want you to write down the date, okay, because I hope every single person that's on here right now, even if you're watching this over the weekend, when we email this out, right, write down 4/21 and RSVP today, because we are capped at 300 agents because of COVID restrictions. So make sure that you RSVP ASAP. This is free for everyone as long as you're active. And write this down too, 25,000 of minimum premium, okay, and this could be a combination of life and annuity. The annuity side, we weighed out at 5%. So 25,000, one free night at our beachfront location, okay? 50,000 is one free night and round trip airfare from anywhere in the country, and then 60,000 is round trip airfare and 2 free nights. Even if you're local, you can make this a staycation, whatever you want to call it. Now, if you've never even written an app with us before, it's free. You have breakfast, lunch, snacks. We have the networking lunch. We have literally 13 of our direct carriers that are presenting, and the day is filled with sales ideas for life and annuity. That's the name of the game. And what we're doing this year, we've never done before, we're going to have an agent panel. So we handpick a few life and annuity agents that are going to sit on stage with me, and we're going to have a roundtable discussion. I want them to talk about their business model, and I also want the agents in the audience to get a chance to ask questions. What are they doing that's different? What can you learn from these agents that are sitting on the stage? So I'm very excited about this. It's going to be very unique. We're going to have giveaways, cash incentives on the hour. It's going to be bigger and better than ever. So please make sure you are there. I mean, we have agents coming from Hawaii, so there's no excuse. Okay, please make sure you RSVP. We'll include the link in the thank you email. And now we're going to move on to our feature presentation of the day. We have Miss Nicole Percy from Corebridge Financial, our Regional Vice President, joining us. Nicole, are you there?
I am here. Thank you very much.
Yep, I appreciate it.
Fantastic. Thank you. Thank you. Hopefully everyone can hear me okay.
Yes, we can. Loud and clear.
All right. Perfect. So I appreciate everyone joining today. I wanted to take a little bit of time, as Bill said, and cover our annuity portfolio that we have here at AIG Corebridge Financial. And we have the full spectrum of products available. We're going to spend the bulk of our time speaking to our indexed annuity product portfolio because we're pretty differentiated in that space. But in addition to the indexed annuities, I just want everyone to know we do have your typical MYGAs available as well. We have SPIAs and DIAs available, and we also have a product that's called the Assured Edge Income Achiever, and that product is a fixed annuity with an income rider. So if we have time to hit on that one this afternoon, we will chat a little bit about that one as well. It's really designed to compete in the SPIA marketplace, only you're not annuitizing. With that product, you're still getting all of the flexibility and the control of a regular fixed annuity product. So some really nice differentiated solutions here in the marketplace. And want to start off with our indexed annuity portfolio. And what I have on the screen here, and Ashley can definitely get this product guide in everyone's hands if you'd like to see it. This is our product guide for our Power Protector series of indexed annuity products. And these are our flagship indexed annuity products. You can see here that we have 5 different products available in this particular series. The first 3 are the Power 5, Power 7, and Power 10 Protector, 5-year surrender, 7-year surrender, and 10-year surrender. These do not include an income rider on them. So they are accumulation products. Yes, you could annuitize them if you chose to on down the road, but these 3 here are really designed for accumulation and for growing your money. The 2 down at the bottom, Power 7 Protector plus income and Power 10 Protector plus income, those are the indexed annuities that have that baked in income rider. So you're only going to use those if you know this individual wants a guaranteed income stream for life out of this annuity product, because there is a fee for that income rider, and we'll talk about that here in a moment. So 5 different products available in the Power Protector suite. Short-term 5-year accumulation, then 7 and 10, and then for the income rider products, we have a Power 7 Protector plus income and a Power 10 Protector plus income. And these are all built on the same chassis. So I'm going to scroll through our guide here, and one of the things you'll see, and I'm going to blow this up a little bit for you here, is this guide lays these products out side by side, which is why this is my go-to for the Power Protector series of indexed annuities, because this guide lays these products out side by side in a very easy manner to digest. So what we see here, first and foremost, one of the differences in the products, issue age, right? For the Power 5 and the Power 7, so the 5-year surrender charge and the 7-year surrender charge product, on the accumulation side, 18 to 85. That's the issue age, 18 to 85. When we bump to the 10-year surrender charge product, that one's capped at 75 because of that 10-year surrender charge schedule. But you heard me mention that all of these are built on the same chassis, so they all have very, very similar features. $25,000 minimum premium amount for all of them. Doesn't matter which one you're going into. 5, 7, 10, doesn't matter if you're using an income rider version or an accumulation only version. $25,000 is that minimum face amount. And they all have very, very similar, in fact, almost identical interest crediting options as well. And we're going to take a look at those here in just a moment. But first, I want to hit on the declining surrender charge. So we see here our 5-year, our 7-year, and our 10-year declining surrender charge period. And as we go down, we then see the plus income version. Now, the plus income versions, again, same chassis, but one of the things that's different, issue ages. So we see Power 7 Protector plus income, minimum issue age of 50, maximum issue age of 80. Power 10 plus income goes 50 to 75. Why 50? Because this is an income product. When we're looking at the plus income versions, these are geared specifically toward providing a guaranteed income stream for life for the individual. So generally your 35, 40-year-old, they're not going to be interested in this product. They're not there yet, right? If you're 35, 40, 45 years old, you're still in the accumulation phase. Your focus is still growing that money. It's not necessarily shifting towards, ooh, now I got to think about retirement. So 50 is the minimum age. when we're looking at those plus income versions, because around 50, 55 is when we see folks focus shift to, ooh, now I really need to start thinking about retirement a little more. Now it's a little bit closer than it was before. So minimum age of 50 for those products. We've got the same surrender charge period here, the 7 and the 10 year that decline. So no difference there, same $25,000 minimum premium amount. But then I'm going to skip down a page here real quick, and I'm going to look at our interest crediting accounts. So I mentioned that they were almost identical across the products, with the one exception of the Power 5 Protector has an extra 5-year point-to-point S&P in it. Other than that, these are all the same across the product lines. So if I choose the Power 5 Protector for accumulation, I can have an S&P annual point-to-point cap, an S&P annual point-to-point par, an MLSB, for example, annual point-to-point participation or 2-year participation. These are all available no matter which product you choose, with the exception of this 5-year point-to-point cap for the S&P. That is only available on the 5-year product because that aligns well with that 5-year surrender charge period. But from an indexing account perspective, we're very well diversified, and that's one of the things that you'll hear us speak to frequently is diversification within these indexed annuity products. You know, these indices are really designed to perform in different environments. So you might have an environment where maybe the MLSB is performing really, really well, but maybe the PIMCO Global Optima Index is not performing all that well in that given year, because these are hybrid indices that are designed for different purposes in different market environments. So we always encourage diversification between these indices, because while they're all very strong, solid indices, in fact, back during, I think it was 2020 and 2021, the Merrill Lynch Strategic Balance Index was the #1 hybrid index in the entire marketplace. So it performed really, really well. It was a prime environment for that particular index. But they're not all going to perform the same every year, right? You're going to have years where some are doing better than others. So if you diversify between these different indices, then you're really cutting down your chances of getting a 0% year, and you're increasing your chances of having one of these hit and have a good year because you're diversified across 2 or 3 of the different indices. So diversification is really key when you're talking about the indexed annuity products. And, you know, we all know the indexed annuity products, part of the value is the fact that we've got the power of 0, right? We have that 0% floor. 0 is hero. No matter what the market environment does, I'm never going to get less than a 0% interest rate. I'm not going to lose money in an indexed annuity because of market performance. And with all the volatility going on in the market right now, that's really one of the things that's made indexed annuities just explode in popularity, because I can go into these different types of indices and I can partake in, you know, the various environments and upsides, but I'm still protecting myself from that downside risk. I don't have to worry about losing that nest egg because of market volatility. So indexed annuities have just really, really become very, very popular in recent years, and they'll continue to be very, very popular. And as Bill mentioned, right now we are in just the prime time for these annuity products. We're seeing caps like we haven't seen in 20 years in participation rates. And, you know, the income riders that we're going to talk about, income rider payout percentages, they're the highest that we've seen in a long, long time. And, you know, these super high rates aren't going to stick around forever. The environment's going to shift again at some point over the next year, maybe 2. And when that does happen, you know, you're going to start to see rates go in the opposite direction. So now is the prime time to lock folks into these products when these rates are at the highest that we've seen. And if we go in here and actually look at rates themselves, here's the rate sheet for the Power 10 Protector product. This is the 10-year surrender charge, and I'm going to blow it up a little bit here. So what we've got here is we have the regular Power 10 Protector. This is the one that does not have the income rider. And then right next to it, we have the Power 10 Protector Plus Income. This is the one that has the income rider in it that we're going to speak to here in just a moment. But what we see is we have various indices, as I mentioned, AQR, Merrill Lynch Strategic Balance Index. We have PIMCO. Everyone's heard of PIMCO. We have S&P. And as we go in and we look at these rates, take, for example, the S&P. Everyone's familiar with the S&P 500 index. Right now, if you buy the accumulation-only version, it's an 11% cap. That's a really, really strong cap. Think back to a year or two ago, and we were seeing caps much, much lower than this. We got excited if we saw a 7% cap, much less 11%. And then if you go into the product that has the income rider on it, it's going to be a 9% cap. You're going to see a little bit of a drop there in that cap because for the income rider version, we're going to talk about all of those additional features that you get with the income rider, because the plus income versions, those are geared more towards providing that income stream for life versus accumulating and growing that money. And we also have really strong fixed accounts in here as well. So not only do you have the indexing accounts available, you have a fixed interest rate bucket as well. So if you have that client that says, you know what, I don't ever want to see a 0% on my statement, can't bear it, don't want to see it, okay, you can always put a portion of the money into that fixed interest rate account, and then they're guaranteed that they're going to get that rate. So they would get that 4.75%, for example, in that 1-year fixed interest rate account. So they wouldn't see a 0 on the statement, even if it was a bad year across the board, because they would have a portion of money in the fixed interest rate account. So really good indices to take advantage of. We have indices that the S&P is obviously all U.S. based, right? We know this, all U.S. based. When we go in and we look, for example, at the Merrill Lynch Strategic Balance Index, this one is also all U.S. based, but what this one does is it looks at 10-year Treasury futures on the fixed side of the house, and then on the equity side of the house, it looks at the S&P, and it goes in and it rebalances between those two buckets every 6 months, and it can move money into and out of cash on a daily basis. We then have PIMCO. PIMCO has a global component in it, so that's nice for PIMCO. If you want to go in and you want to look at a global component, PIMCO has a global component on the equity side of this index. And then on the fixed side, it looks again at U.S. Treasuries. And then if you really have a client that's super interested in the global aspect of things, the AQR Dynamic Allocation Index, that goes in and not only does it look at the U.S., but it also looks at various other countries globally on both the equity and the fixed bucket sides. So we really do have a lot of solid indices that can get your client in just the U.S., in the U.S. and international, mainly international, whatever their interest is, we've got an index for them. And just to pop over and compare, because the 5-year, the 7-year, and the 10-year do all have different interest rates available, this is what the 5-year product looks like. And I'm going to scroll down to the S&P, and we see here it's a 10% cap. So not a big shift from the 5-year to the 10-year, right? The 10-year was 11%. The 5-year still at a 10% cap on the S&P. So incredibly attractive rates, caps even for the 5-year product. And we're getting a lot of play in that 5-year product for accumulation because right now folks are really uncertain. They don't know what's happening. They don't know what's going to go on in the economic environment. Markets are incredibly volatile. We have all kinds of things going on globally right now that are unsettling. Folks are a little apprehensive from the accumulation side of tying their money up for a long period of time. The 5-year Power 5 Protector product has been incredibly popular because folks can kind of relate that to a CD, right? Folks are used to going and buying a 3 or a 5-year jumbo CD. Well, a 5-year lock in an indexed annuity product is really not that hard to digest. So you're able to lock that money up for a short period of time, but still get the benefit of having an indexed annuity and all of this upside potential. So let's hop back over here and let's take a moment to look at the actual income riders that are available on the products. So this is called our Lifetime Income Choice Income Rider. It's the same income rider regardless of whether you go into the Power 7 Protector Plus Income or the Power 10 Protector Plus Income. It doesn't matter. If you buy the Plus Income version, you're going to get this exact same rider. It is going to function the same no matter which version you buy. So why would I buy the 7-year over the 10-year? Well, maybe you've got someone that's over the age of 75 and they're still interested in buying a product with the income rider. Well, that's where you would go to the Power 7 Protector because you can issue that Power 7 Protector Plus Income up to the age of 80, whereas the Power 10 Plus Income cuts off at the age of 75. So with this particular income rider, we actually have 2 different options to choose from. 2 different options. We have our max income option and we have our level income option. And I'm going to start at the level income option because the level income option, this one's really the one that we're used to seeing in the indexed annuity space. You buy the product. At the time you decide to trigger income, we're going to lock in your payout percentage, and that's going to determine your income stream, right? So if I bought this at 50, if at age 65 I decide to trigger income, if I'm doing the level income rider, I'm going to get 6.5% if I choose a single income rider. I'm going to get 6.10 if I choose a joint. Very small reduction to go from single to joint. So we are uber competitive in the joint payout space because of that very slight reduction. A lot of other folks we see reduced by a full percentage point if you're going from single to joint. But if I'm doing a single and I'm going to trigger income at age 65, I'm going to lock in at 6.5%, right? 6.5% is going to be my payout percentage. So 6.5% of whatever my income base is going to be, and that's going to be my payment guaranteed for life. And it's going to be level. It's not going to change. The max income's a little different. Max income's a little unique to the indexed annuity space. With the max income option, this one is geared towards those folks that they want more income upfront during those early years of retirement. So I know I'm going to be active in retirement. I'm going to be flying to Italy and stomping those grapes. I'm going to be, buying an RV and driving around the U.S. I'm going to be flying all over the place to see my grandkids. I'm going to be buying that boat, joining that golf club. I'm going to be doing all those things I couldn't do when I was working. But there are all these things on my bucket list I want to go do while I'm still healthy, while I'm still in good enough shape. What do all those things take? Money. They take money. So the max income option is going to pay you more up front during those initial retirement years. And then in the later years, it's going to drop back and it's going to lock you in level guaranteed for life. So for example, if I go in and I purchase the max income option, and you do have to choose at issue which option you want, max or level. But if I go in and I choose the max income option, what that's going to do, if I decide I'm buying it at 50, at age 65, I'm triggering the income stream. It's going to lock me in at 8%. So I'm going to get an 8% payout for as long as my contract has value. As soon as my contract value depletes, maybe 15, 18, I ran one the other day and it ran 21 years. Once my contract value depletes and goes to zero, then it's going to lock me in at what we call a protected income payment of 5% guaranteed for life. So I've ran out of money. I don't have anything else in my contract value, but I'm still going to get 5% now guaranteed for life. And that is really a pretty sweet deal when you think about it, because if you think about the safe money withdrawal rate, right? If folks are pulling money out of their equity portfolio and you ask them what that safe money withdrawal rate is going to be to sustain that 30, 35-year retirement, folks are still going to tell you 4%. It's not. We know it's not. It's not 4% anymore. It's lower than that, but they're still going to tell you 4. That's just ingrained in our brains. So great, I'm going to pay you much, much more than 4%. I'm going to give you 8% at age 65 until your contract runs out of money. And then when your contract runs out of money, I'm going to lock you in at 5%, still higher than the 4% safe money withdrawal rate that you told me you'd pull out of your equity portfolio. It's a win-win because, oh, by the way, when you run out of money in your equity portfolio, 4% of nothing is nothing. When you run out of money in this product, we're locking you in at 5% level, guaranteed for life. So you choose max or level at the time of issue. You do choose if you want single or joint. However, you can change between single and joint and single. So if I buy it at single, 3 years down the road, I get married, I haven't triggered my income stream yet, I can add my spouse on. 2 years later, oops, it wasn't true love, I get divorced, I still haven't triggered my income, then I can take that ex-spouse off and I can move back to single. So you can go single to joint, joint to single up until the time you actually trigger that income stream, and that's when it locks in. The other nice thing about this is you're going to get a 10% roll-up rate or income credit every year that you defer triggering income. And that is not capped at 10 or 15 years. There's a lot of products out there that will give you a really nice roll-up rate, but they only give it to you for 10 years. And then after that 10th year, even if you haven't triggered income yet, your roll-up rate stops. This one does not stop. You're going to get this 10% roll-up rate no matter whether you choose the level or the max income option. You're going to get this 10% roll-up rate all the way up until the time you trigger income or turn age 95, whichever comes first. So if I buy this thing at 50 and I decide I'm not going to trigger it till age 72, guess what? I've gotten a 10% roll-up rate or income credit on my income base every year for 22 years. That's phenomenal growth. And you're going to get that 10% no matter what the indexing accounts are doing, no matter what the market's doing, you're going to get that 10% roll-up. So that is another big advantage that this particular product has. That 10% doesn't stop until either you hit age 95 or you trigger your income stream, whichever one comes first. So very, very flexible income rider in the fact that you can change from single to joint, joint to single. You can choose when you want to trigger the income. Guess what? You can trigger it right away, or you can defer it all the way up until the age of 95. Lots of flexibility in this particular product. And with this particular product as well, I mentioned earlier that because it has all of these different income rider features in it, because we're guaranteeing that income stream for life, there is a fee associated with the income rider. That fee is 1.10%. So 1.10% of the income base, that's what the fee is, and it's just going to be deducted from the contract value each contract anniversary. So they don't get a separate bill or anything like that. It's just automatically going to come out of that contract value. So as we're going in and we're looking, I just want to hit one or two quick sales concepts before I turn it back over to Bill for how this comes in handy. And this is looking at the max income option. So there's a couple of ways to look at this max income option, for example. One way is you get more from less. And what do I mean by that? What do I mean by more from less? Well, you know, one of my other partners in crime, one of the other VPs, when you ask them, hey, how much is the right amount to put into an annuity product? A lot of times he'll joke and he'll say, well, the least amount. And that's what this product does. This product allows you, this max income option allows you to put the least amount into an annuity and maximize the income stream. So, for example, if your individual said, hey, I want a $20,000 initial income. That's what I'm going to need when I initially retire. When I'm out and I'm going and doing all of these things, I'm going to need to supplement 20 grand so that I can go do all these things on my bucket list. Fantastic. If you were to look at your typical 6% for life at age 65 level income rider, the typical one that we generally see out in the field, I would have to fund this annuity with $333,000 to get that $20,000 income stream. With the Power 7 or Power 10 plus income and that max income option, I only have to fund it with $250,000 to get this same $20,000 that I initially need during those early retirement years, or what we hear folks refer to as the go-go years, right? You have your go-go years, your slow-go years, and your no-go years. This is really designed, this max income option, to fund those go-go years and on into those slow-go years. And then on the back end of those slow-go and into the no-go years, that's when it's going to drop back and lock into, for example, what we looked at a few minutes ago, 5% level for life. So I'm able to save $75,000 that I didn't have to put into this annuity to fund this 20 grand. I've got $75,000 extra now. I can take that $75,000, put it in a managed money account. I can take it and use it towards my vacation home. I can take it and use it towards my grandkids' education. I can do whatever I want. I've just opened up 75,000 doors because I was able to save 75 grand that I didn't have to put into the annuity. So you get more income for less premium dollars with this max income option. So as mentioned, we do also have, and I know we're running close on time, but I do want to just mention we do also have the MIGA products. So for our MIGA products, those are called the American Pathway Series. So if you are interested in one of the MIGA products, we have multiple American Pathway fixed annuity products available. One thing I'll point out on the fixed annuity product portfolio, we do actually have an annual free withdrawal of 15% instead of the typical 10% on the MIGAs. So a little different there. We have a little bit of added liquidity in those products because of the 15%. And then if you're interested in competing in the SPIA marketplace, and I know this piece is very, very busy, but I just want to spend one brief moment on it. If you're interested in competing in the SPIA marketplace, this is the Assured Edge product. This is the fixed annuity with an income rider. So just like with the indexed annuities, you're getting an income stream, but you're not annuitizing the product. You're not losing control. And this one is very, very simple. When you purchase the product, for example, at age 65, this one is going to go ahead at the time you purchase the product, and it's going to lock in your payout percentage. Then, for every year that you defer your income stream, that payment amount is going to grow at 8.5%. Okay? So very easy math. This is just a guide. One side is single. If you flip it over, the other side is joint. And it just allows you to say, if you have $100,000, Mr. or Mrs. Client, you're buying it at age 65, your payout percentage is 7.10. If you trigger income right away in year one, it's $7,100. If you defer a year, it's $7,704. If you defer a few years, it's 95/14. And each year that you continue to defer, you see that payment amount grow. So this is very, very competitive. In the SPIA marketplace, this one is all about maximizing a level income stream because it is going to lock in and it's going to be level guaranteed for life. So maximizing a level income stream, it's not concerned about accumulation, it's not concerned about growing the money, you've already done that. I just now want to maximize a level income stream, but I don't want to SPIA because I don't want to lose control of my lump sum of money. I still want all the control and flexibility that a typical MYGA would give me versus the rigidity that you get with a SPIA product. So keep that one in mind as well. In case you run across any SPIA cases, you should probably be taking a look at this particular product as well. And with that, Bill, I will pass it back over to you.
Well, that was fantastic. I wrote down some notes myself. I learned a lot, so we so appreciate the time. So what I want to do now is jump into various ways to get the word out, right? To open the door, share your story, so to speak. And let's shift gears again, right? The slide in front of you is how to get started. So if you want to get set up with AIG Corebridge, with Levinson, you want to take advantage of all of our tools, platforms, that is the yellow arrow in front of you. So you can see my contracting. And then, of course, make sure that your training requirements are all in. We have a link on our site just for that. And all of this will be in the thank you email as well. The next slide here, and by the way, I'm going to get everyone out just a minute or two early if we speed through this, but there's some important notes here and messages that I want you to walk away with. This came up, and I was talking to a agency owner. It's been about 10, maybe 2 weeks ago now, and this person owns 4 health agencies locally in Florida. And they have a bunch of agents, and most of their consumers, they're focused on health, Medicare, Medicaid. Most of their consumers are 65 to 72, 73 in that area. And we were talking about long-term care and, opportunities. And the initial call was about life insurance. And then we started to speak about annuities. And he said to me, Bill, this is such a huge opportunity for us. We got to get started. So we came up with some marketing pieces for him and did some fact finding, etc. So anyway, this point came up here on the left-hand side. And think about this as an agent marketing, right, to these consumers, especially in that retirement age bracket. So did you know that 70% of people turning 65 today will require some type of long-term care services, yet 90% of long-term care insurance carriers aren't issuing new policies? Okay, yes, that's a fact. So this is an option, and this is what they're running with now. This is an option for an annuity product that has guaranteed issue long-term care rider built in. Okay, this is huge. So they are running with this. They're using a Facebook ad. They're making sales from this, and it's blowing up. Okay, so we have another agency that's doing the same exact thing. But my point is for you all, right? If I have my agent hat on, I have to get scrappy. I have to get creative, right? With different hooks. I have to create sizzle. This is a great story to tell to open the door. Okay, it's working. We're seeing it work every day now. So I love the Corebridge story, some awesome products. But again, you have to know a little bit about each company and kind of like where their niche is. This product with Equitrust, huge. And again, your marketing should be created around these concepts and strategies. And that will open the door, especially when you're competing against literally almost 1 million agents across the U.S., right, on the life and annuity side. So the next slide is these are social media ads and posts that I literally went on. I did a search. And by the way, I promised our agents every week I'm going to share new posts depending on what the webinar topic is about. So obviously today we're talking about annuities. So what I did is I found, if we look at the two posts on the left-hand side, I found the top performing post right now today. Okay, in fact, that was 1:32 p.m. Eastern time. So the top performing posts that have to do with annuities, right? So the left-hand side, and again, I mean, you can't use this exact ad or post, but you change some of the wording, do it your way with your style. That's fine, but use this as the chassis, the format, if you will. So real fast, left-hand side, here are 4 reasons why annuities can be a good way to build an income stream, right? We just spoke about this with Nicole. So guaranteed income, one of the main benefits of annuities is they provide a guaranteed stream of income, okay? And the 4 boxes, and all that is 4 bullets for the consumer, right? Tax benefits, guaranteed income, flexibility, and professional management. Very simple. 235 people read this and then liked it. So now, as an agent with your agent hat on, reach out to those 235 people. They showed interest on your post. Again, 235 new prospects, new leads that you created for free. Okay, the next one over, right? Very similar. This talks about why life insurance and annuities can be good options for freelancers or individuals with unstable income. So again, FIAs, right? Indexed annuities, and then indexed life insurance or IUL. So if we look at the bottom, here are some important reasons why life insurance and annuities can be good options. 215 likes, 49 comments that people actually said, hey, I want a quote. Can you call me or email me? And then, of course, direct message. But again, don't reinvent the wheel, right? You change a spoke or two. So these are great options for you. Let's move one over. This was a great performing post on Facebook. What are you investing in today that your future self will thank you for? How to replace your outdated 401k with an account that offers higher uninterrupted compounding interest and tax-free withdrawals. Right-hand side. This is a great, I love these do you know, right? Post, did you know an annuity is a contract between an individual and an insurance company? That it explains in layman's terms the point of an annuity, which, by the way, you'd be surprised, most people have no idea, and it's your job to go out and educate. Okay, that comes first, education, and then the sales naturally come. But anyway, we'll include this slide in the thank you email. And again, it's just about new ideas and ways to get the word out. The next slide here, these are running today. These are real live Facebook ads drumming up a ton of business, right? And by the way, you can do this on your own. If you literally go into LinkedIn, Facebook, Instagram, and just put the hashtag indexed annuities or MIGAs, okay, you're going to see a bunch of ideas. You can put top performing, recent, whatever you want. Anyway, left-hand side, this is a great example of the free giveaway. We all know how this works. It's a free guide given out to these consumers. The point is the consumer reads the guide and says, oh my gosh, this is me. I want more info. That's your new free lead. Bingo. Okay. The right-hand side, this is a perfect example of income riders. And hey, click here or call for your free quote. Okay, very, very simple concept. But again, you got to get the word out, especially, right? I brought up that health agency example that's running with the LTC rider, guaranteed issue. Okay, team up with health agencies, P&C agencies. And it's literally wide open. It's all up to you how high you want to build this thing, right? And I always say, like, put your right foot down on the gas, punch it, and just get scrappy. Do whatever it takes. So what I would do is have that running on autopilot, and then I would think about our annuity lead programs. So the first one, real fast, this one is focused 100% on indexed annuities, okay? There's 1,000 mailers that go out on your behalf. The cost, your cost, it's a co-op discount, $550. That includes postage, your name and return address. We're seeing about a 2% return right now. These work phenomenal. You got to remember, one sale, okay, could be 5, 10, 15 grand of commissions in your pocket with basically no underwriting, just suitability. So come on. Okay, I think you get the message. The next slide is a financial services mailer that, again, can also be directed towards annuities or IUL. It's up to you how you want to pivot. So the retail price is $650 for 1,000. Levinson agents pay $600. That's the co-op discounted rate. This one works awesome. We're seeing up to 2.25% return right now today. Okay, and again, look at the average age. That is the hot spot when we're talking about annuities. Okay, let's keep moving along. So our podcast I just recorded last week. Now, we're talking about social media. We're talking about these paid ads for life insurance and annuities. So I sat down with Amir, the Watt Media guru, when it comes to social, SEO, websites, paid ads, all the above. 1 hour, I pick his brain, right, to help our agents learn about what to post, what not to post, how often, a little bit about Facebook ads and what you need to know in 2023. So great podcast episode. We'll include that link, or you can check out your favorite podcast channel and just pull up the Bill Levinson Experience podcast. Okay, just one more slide, and then we'll put a bow on this and have our question of the day. So real fast, Ashley touched on the Annuity Agency Automator. So every single week, Tuesday, Wednesday, Thursday, we have our live trainings. These are complimentary, and Kevin, our programmer, hosts these live, and it gives you a chance to ask questions as we go with other agents. Okay, so you can learn a lot on those calls. On the bottom blue section, that's our weekly live webinar series, which is what you're on to right now. So today, obviously, was focused on annuities. Tomorrow, we're talking about life insurance with Columbus Life, by the way, who also has some great indexed annuities as well. So another good option there. But again, tomorrow is life, today annuity, and we're going to keep this going every single month. Okay, I want to make sure our agents learn and get their foot out there. Last slide here, and this is our Positive Tuesday quote of the week. The ones that say it will never happen are the same ones that never made anything happen on their own. Boy, is that true. We know how that works, right? You got to have your blinders on, be laser focused, and move forward constantly. Okay, take all the fuzz and all the stuff going on around you, okay, and literally tune it out and stay laser focused with your eye on the prize moving forward. Very, very important. Our question of the day. You have to answer first and correctly right now, and we're going to announce your name if you're first incorrect. So make sure your little fingers are on the keyboard and you're ready to rock and roll. I'm going to ask my question right now. Andrew's going to check to see who comes in first. Question is, I mentioned 2 co-op annuity mailer programs. Tell me the co-op prices on each one. Okay, that's 1,000 mailers, 2 different platforms. You tell me the price of each one. I mentioned 2. You tell me the price of each one, your price, not the retail price, and you win. Got the Fire HD tablet by Amazon and the IUL prospecting book. You got to tell me both prices, both mailer programs that I just mentioned in the last 10 minutes. Andrew, do we have a winner?
We do. First correct answer is Dennis D. Dennis D.
Dennis D. Congratulations. The answer was $600 for the financial services mailer and $550 for the annuity mailer. With that said, keep your eyes peeled for our thank you email. Have a great day, great selling, and make sure to tune in tomorrow, same time for the Columbus Life Training webinar. Thanks again, everyone.